I know that you've been trying to get to the bottom of, your latest thinking on what is happening in France and how that impacts your investment strategy.
Certainly, and I will start by saying that even the pollsters are not believers in their own polls. I mean, you tend to find that there's a lot of concern, not so much about technique, although that's partly it there too, but about the depth of support. And in the case of Macron, the poll numbers have improved, no doubt, but it's also, I think, apparent that both Le Pen and actually Fillon seem to have a deeper core voter that is unwavering in their support for them, and the concern is that Macron's support is relatively thin, and if something happens, it could peel away. So I think everything is probably still in play, both in the first round, potentially as well even in the second round.
Really, you'd go that far, despite that big polling difference? Does that suggest then that you contemplate, you think about the possibility of a Le Pen victory in the second round?
I think you think about it, but it's not still the most likely outcome. It still seems pretty improbable for the simple reason that the numbers indicate she has to make up a great deal. But there are scenarios. Bear in mind that in that second round, what matters is the percentage of voters who vote. And if turnout slumps in the second round, which is possible, then her starting position, if she starts with 30 to 35% of the vote, which is a little higher than polls are indicating, but maybe not out of the realm of possibility, is that she actually at that point in time, in terms of total votes cast, will be getting pretty close to the 50% mark if turnout turns out to be something quite low by French standards, say 65%. So there are scenarios where it could happen, and as market participants, we have to take that seriously.
It's interesting that yesterday on Bloomberg.com we ran this story, the various scenarios that may invoke a breakup of the euro. 15% was Le Pen winning and restating the French franc. The second was Italy imploding, and the third was, of course, Greece Grexiting. I mean, those scenarios are still quite left of centre. But the risk to the euro, the risk to the currency in the bond markets is where we see this most manifest. But bond spreads are not blowing out, and the euro is not collapsing, Larry. So the market is behind your possibly outlier risk.
So in that sense, yes. I mean, the market right now is suggesting that there is a small probability of one of those countries exiting. We know it must be small because, say, the spread between OATs and bonds, which was recently were 70 basis points or so, in no way, shape, or form would reflect what would actually happen to those markets if an exit took place. The spreads there could be multiples of that, 1,000% or something like that in a true sort of breakup type scenario. So it suggests that the pricing, which reflects not only the probability of the outcome, but the magnitude of the outcome, is telling us that the odds the market is setting are very, very low. But therein lies the reason why we look at it closely, because if the market's not pricing it, we have to be certain that we agree with them.
Tell me this, are we underestimating? I'm going to the Netherlands next week, and we've got this dissipation in Geert Wilders' support, and the polls have shifted away from Wilders. I'm just wondering, are we underassuming the big changes which need to be addressed in Europe, no matter who comes to power, in the Netherlands, in France, in Germany?
I don't think there's any doubt about it. This sort of, as it were, populist backlash can be seen in so many places now that it is a real phenomenon, and it's not probably a transitory one. If one wants to look at the perhaps more optimistic sort of side of things, it would be a victory by someone like, say, Macron in France, who then, after German elections, could then work on a partnership with Germany, the old Franco-German alliance, to place Europe at the center of what you might call the progressive solution to these particular issues. Yes, liberal, yes, open, in contrast to what we see out of the United States, perhaps even a bit in this country, but in a way that is also meant and designed to take care of those that are most affected by things like globalization and technological change. A real sort of European solution to this, which is inclusive growth, if I could call it that. That's where perhaps the potential for Europe resides, but we do have to get through these elections.
We have to get through these elections.